Every now and then I get a text message from a friend that asks me about a Trading212 question. And today it's all about the Orion spin-off from Realty Income. And for every 10 shares of Realty Income that you own, you'll receive one Orion share in compensation for them splitting off. I personally sold all of this straight away. Not because Orion's necessarily that bad, but because I don't have time to understand it. Now, Realty Income is a triple net lease REIT. By that, I mean that it releases out all of its buildings to companies who basically pay for all the maintenance and all the upkeep. So Realty Income really only has to own the building, and the businesses that sit in the building just pay rent on it. And it's got a huge amount of clients. It's got loads of buildings all over the world. Top 20 clients make up 50% of its total tenancy. And it's got some quality stuff in there. It's got some terrible stuff in there, but it's got some quality stuff in there as well. 7-Eleven, Walgreens, Dollar General, and FedEx, and Dollar Tree as well. They're its top ones, and they're all pretty solid. Particularly FedEx, I like the look of. I love the big box warehouse REITs. As you head down a little bit lower, you've got fitness and gyms. Sainsbury's, which isn't that bad. They're not going anywhere, are they? But they're just not a profitable business. And then obviously cinemas make it down to 2.5% of their portfolio. I'm not happy with them having cinemas, but they they know it better than me. I'm just not a fan of cinemas. Home Depot is a very big one there. Hopefully they will gather more Home Depot tenancies going into the future. But there could be many reasons for the office REIT spin-off. One would be the office REITs, because there's a lot of work from home going on. A lot of people aren't going to be going back to offices to work, so that suggests that office REITs are going to have a hard time over the next couple of years. That's still a lockdown story. Whether that's a true lockdown story still, particularly as you see companies like Peloton and Planet Fitness regaining a lot of ground. Is the same story going to go for office REITs? I don't know yet. It's a little bit too early to tell. However, I got rid of this because this is a story that I don't want to know. I simply sold it straight away. There is, of course, a very strong possibility that this REIT has been spun off because the shareholders and because the managers do believe that this company has a lot of value on its own. I'm going to let the price drop a little bit on it though first before I have a really good look at it. But if there's really good buildings in here that could be made use of, then a smart investor might be able to see something going on in here. Not for me right now though, which is why I sold it straight away, just to be sure. And I think the money went straight back into a couple of other companies in my portfolio. So in your Trading212 portfolio, if you have this, you will now have one company that says Realty Income and another company that says Orion Office REIT Properties. Do what you want with them. I would say have a look first if you've got the time to have a look. Personally, I've sold out, and I think a lot of people have sold out. I think that's a bit of a trend going on. I also couldn't calculate how much I would have lost on that. I must have lost something on it. Overall, I'm probably at a net gain. But is this a time to buy Realty Income Corp? Realty Income Corp has a habit of overextending itself and coming back to its price to AFO line of 15, and that's what it seems to do for years and years and years, all the way since 2007. It gets overextended, comes back down to the mean, and this is a mean growth stock. So with that in mind, am I buying Realty Income right now? I'm not entirely sure. If I go to the forecasting based on price to AFO growth, it does sit around 15. Its average AFO growth is about 20, I think. Yeah, so it usually trades at around 18 to 20. That's 18 to 20 price to AFO. So let's put it nicely at an 18. And over the next couple of years to 2024, because the dividend saves it, you end up with a total annual return of 4.72%. That's likely well behind the S&P 500. If you want to take analyst estimates, that's a 6.36% growth over the next 5 years to 2026. I don't see this as a realistic outcome right here. I think the Realty Income is overstretched, And a bad case scenario where it goes down to a price to AFA of 12, even though it's never done that in the past, let's remind ourselves of that. It can still lose about 23% in capital appreciation. The dividend then helps you out there with a total return of 1.1%. That's minus 1.1%. So that's your worst case scenario, or a bit of a rough case scenario. Realty Income for me right now is not a great company at a reasonable price. It's a good company at a bit of an overvalued price because it's seen historically as a safe stock, a safe dividend payer. It's a bit of an income giant. Going forward though, is it something I'm going to buy? Not really. I haven't bought anything into Realty Income for quite some time now. I'm going to wait for a price drop or for Realty Income to come out with some really good news first. But as far as the Orion office REIT goes, I've sold it off without looking. I won't deny that. It's just because I don't have the time to look into it and learn about it just yet. But I will in the future, because often spin-offs like that can open up a lot of value and it's worth looking at. Thank you very much for watching, guys. If you enjoyed this video, please feel free to like, subscribe and invest.